So I'm here to show you my stock account. Right now, the total asset of my account is $70,931.19. The total position is a loss of 2,602.4, and today's PO is a loss of 0.05%. Today, SQQQ closed lower to 20.47, and United Natural Gas closed higher to 6.7, a rise of 1.21%. The market generally closed mixed. Dow Jones Industrial Average closed down 0.31%, Nasdaq Composite closed down 0.09%, and S&P 500 closed down 0.23%. Today, the auto manufacturers closed with a loss, as the Tesla leaving the loss. After the arrival of the meeting in September 2023, the global capital markets were volatile. On one hand, the 10-year Treasury rate rose sharply to surpassing 4.5%, but also the S&P 500 down 2.56% in 2 trading days. The Fed did not raise interest rates, so the federal funds rate right now is at 5.25% to 5.5% stayed. So with the stock market and the treasury turmoil is overall volatile, because the Fed sharply raised its economic forecast for 2023 and adjusted to Doppler to cut its expected number of 24-year rate cuts from 4 to 2. Many investors still wonder what's wrong with the Doppler. After all, there is no rate hike. In fact, the federal funds rate is not the essence of U.S. monetary policy. It is only a part of it. And the essence is that it's the expected path of the federal funds rate in the next 1 to 2 years. In other words, the current federal funds rate is very important, and how people believe it'll change is more important. So, adjust the U.S. monetary policy is not to adjust a point, but to adjust a whole line. And usually the whole line is very complicated, and we can do the next best thing to pay attention to the area surrounded by the curve and the horizontal axis. That is synthesis of the line. Generally speaking, this area is the interest rate of 2-year Treasury rate. In other words, the 2-year Treasury rate is the essence of the U.S. monetary policy. And some of our expectations is that the rate cuts will begin in July next year, and the 2-year Treasury rate corresponding to this path is 4.94%. Interest rate will begin probably around November, with a 2-year Treasury rate of 5.22%. In other words, although the Fed did not raise interest rates, it raised its 2-year Treasury guidance price from 4.94% to 5.22%, or 28 basis point rate hike increase. So, generally, the Fed does not arbitrarily adjust the pricing. It follows some kind of rules, like to make some kind of outlook for the future about the economy, and set itself an expected path for rate hikes based on that outlook. So people have been focusing on the economic projections normally at each Fed meeting, and the true meaning of the 2-year Treasury rate interest rates, figure out the official 2-year Treasury price, and then understand the market correction on this basis. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.